How's it going, everybody? It's Stas here. Welcome back to another video. So in today's video, we're going to be doing a market update, going over the Dow, the S&P, and the NASDAQ, and we're also going to be doing a trading update, talking about what I personally did in the markets today, plus a bunch of stocks and ETFs that I'm watching and that I'm looking to trade in this month of April here in 2020. And like you all read in the title of today's video, there's one critical level here on the S&P that I think if we break this level, there's going to be a lot of red in the market. So we're going to go over that, a bunch to talk about in today's video. So if you guys do enjoy it, hit that like button for me. Consider subscribing to the channel. And I challenge you guys. We did 150 likes. We did 175 likes. We beat those two levels. Let's try and get 200 plus likes on this video. Hit that like button. And also, if you haven't done so already, join our Discord group chat and our Facebook group linked down below in the description box. So let's just get right into it, guys. The markets today were quite interesting, and they played out kind of to how we talked about in yesterday's video. We talked about this, right? This level of resistance on the S&P at 2520 roughly to about 2530, that is a very strong level of resistance, and you guys can see it today based on the S&P because it was down $38, down 1.51%. And I talked about in yesterday's video how if we failed to break out and hold 2520 as a support, if we failed to try and rally up towards 2580, it was likely that we were going to fall down and see another red day, some downwards momentum. And that's exactly what happened. We opened up this morning. We tried holding 2520. We tried for the first 30 minutes, but ultimately the floor fell right under the S&P, and we ended up going down from 2520 all the way down to that level of support at 2450, which just happens to be that key level on the S&P that if we break, guys, we might be going down a lot further. And I'm thinking, and you guys know if you've been following this channel, I'm thinking we're going to test the lows. If we break, that's if we break 2450 heading into Monday's session. Maybe we don't test the lows next week, but in the coming weeks, we may fill this entire gap down at 2300, and then if we break 2300, which is another key level, that is where we're going to probably hit a new low in the S&P. That's if everything in terms of the CV continues to get worse, which it's likely going to continue to get worse. And as long as the economy is shut down, I can definitely see it happening. Even with the Fed doing unlimited stimulus, guys, I can still see this market going down more in the short term. And, the technicals back that, as we are seeing a lot of resistance under this overall 180 SMA and this 50 SMA here on this hourly chart. And we talked about this in videos about a week ago, right? When the markets were rallying back up, when we saw that 17% rally in the S&P, I was talking to you guys about don't get too excited. This might not be a V-shaped recovery. It's probably not going to be. Every bear market has little rallies in it. And it seems like we are heading down now. It seems like that was right. But let's not go too ahead of ourselves here because who knows? This thing could really bounce back up and have a rip-your-face type of rally, which we've seen before. But just keep an eye on that level. It is very, very important to really determine direction here in the S&P 500, at least in the short term. And when we're going over the NASDAQ here, it held very nicely. A key level of support here, 7,500, as you guys can see here on the hourly chart. And it had a pretty solid day. Just kidding, guys. It did not. Down 107 points, down 1.41%. The only good thing is, again, that we held that 7,500 support. That's a good thing for the bulls here, but I'm thinking if we gap down, 7,250 is the next level we'll hit, and then under that, we're probably going to be testing those lows, which is right around $6,800, $6,700 on the NASDAQ. And over here on the Dow Jones, guys, down 360 points today, down almost 1.75%. And we can see, just like the other major indexes here, the Dow was and is getting rejected by the moving averages on the hourly chart, and it actually held a nice support of its own, roughly at about 20,800 to about 21,000 bucks, which heading into this upcoming week, if we break that, there's probably going to be another leg down here on the Dow Jones. And the interesting thing, guys, this past week in the market, it was actually a pretty decent week. I think we ended up going down 3% across the major indexes, the S&P, the Dow, and the NASDAQ, roughly down 3%. And the Russell, which I know I don't talk about it really ever on the channel, but the Russell 2000, I believe, got hit a bit harder, and that's small and mid-cap businesses, down about 7% for this week of trading. So pretty volatile, up and down, and, that's kind of where the markets ended up finishing for this week and how the markets did today, and a bunch of critical levels to watch out for. And, of course, we're going to continue doing this analysis, so subscribe to the channel if you haven't done so already, and let me know down below in the comments, what are your thoughts on the markets right now? So let's get into what I personally did in these markets today. And today, guys, was a perfect setup day for SPXS, especially if you were watching that level that, again, I talked about yesterday in my video and just about a couple minutes ago here in this video, that level on the SPX, 2520. Once I got the confirmation that we were headed down from that point, that is where I got into SPXS. And I got into SPXS, I got filled at $17 per share, and I'll show you exactly where that is here. 5-day, 15-minute chart. Actually, let's go on the daily chart to see it better, because we can see here we were up to about 1750 pre-market. We gapped down all the way to 1650, pretty big gap down there, as these markets were kind of rallying a bit pre-market, and then we saw a nice, strong foundational support on SPXS, which spanned pre-market and actually after market hours yesterday at about 1650, and once I saw it take off from there and break this 180 SMA, that's kind of exactly where I put my limit order, right? My limit order to buy the shares. And then ultimately I set my exit limit order at about 1735 initially. I was watching it, slowly inching it up, and ultimately I ended up getting out at about 1745. Actually, no, it was 1740, a little bit under that, right under the pre-market resistance that we just talked about, right under that 1750 level. So that was the first move that I personally made today. And let's see on a percentage basis what the move was. I think it was closer to about 2.5%. So about 2.5% on that move. And I made another little bet here on a CCL put option. And I don't do options too often, guys. I am in the options game, but I don't day trade them. I know a lot of people that watch me, day trade options, they swing trade options. I'm more on the side of trading options, kind of where you see a strategic move, not necessarily every day, but when I see a stock that I have a conviction that it can go down or up, and I'm trying to hedge a position, a long-term position, that's kind of where I play options. And I don't know if I'll ever be a daily options trader. Who knows? Maybe a couple years down the line that could happen. Maybe I'll get into it a lot more. But as of now, I'm just more of a sparse kind of options trader, right? I probably place a couple trades here and there, right? And this is one trade that I made today, and I'm pulling it up on my phone here, and I bought 5 contracts for CCL, put option that is, with a strike price, I believe it's at $4 per share. This is a bit of a risky option, guys. It's kind of far out of the money here, and the expiration date is on the 22nd of May. So 5 contracts. I paid about $250 here, and I'm down a little bit. I'm down about $4 right now, about 6% on these options, but nonetheless, I like sometimes placing bets like this in the market, especially when I see a stock going down further. And CCL is one of those businesses that it's not being supported by the stimulus plan. And honestly, their business is completely shut down. From my understanding, they have no cruises with any people on them right now. Obviously, there are no cruises going on right now. So in the short term, I could definitely see this stock collapsing towards the $5 level, $6 level, and I'm definitely looking to make some profits there on these options. And the risk is, guys, I lose the $250 that I did end up betting here, but the upside is I can make some pretty decent profits, right? So let's get into what kind of some other stocks that I'm watching, and I would love to know what you guys have to think about any of these trades down below in the comments. Is that CCL move a little bit too risky? You know, do you agree with it, or do you oppose it? I would love to know what you guys think about that. And let's just get into a bunch of other stocks here, and a mortgage REIT that I knew about this REIT because I do own one REIT, which is ticker symbol O, and I like tracking different REITs in the space, and this REIT has completely gotten squashed. So I want to go over that here in a little bit. But the first stock, let me pull up my notes here because I did make a list. Okay, come on. Okay, here we go. The first 2 stocks, and these were stocks that were called out in the Discord group chat. Not by me, but by a few other members in there. And again, if you guys are not in there, that is linked down below. These 2 moves were short plays in Facebook and Square. And in general, guys, a lot of these stocks, right? A lot of these volatile stocks, especially like Square and Facebook, when the markets are, and this is the case with a lot of stocks out there, right? When the markets are seeing kind of a drastic drop, a lot of the time these larger cap volatile stocks follow. Not all the time, but these did today. Facebook and Square. And again, people called the shorts out in the morning, and take a look. This thing went from 158 as the markets were slipping, Facebook that is, from 158 down to 150. So that was a very good short play. Do I short stocks? Not really. No, it's not really my game plan, but if you guys short stocks, these would have been perfect. And put options, I do play put options, obviously, and maybe we'll see a put option play in these next week. We'll see how the markets go. And if you see Square, SQ, this went down from about 45, and it slipped very quickly down to about 42, where it ended up finding support. That was a move. I think it was close to 10%. Not that big, not that much. I'm kind of blowing that out of proportion. More like 7%, but still pretty big move to the downside. So I'm going to be watching a lot of more potential downside moves in Square. I could see it going back down to the 30 level, honestly. Maybe not all the way down to 30 flat, but in the general 30 area, especially if this market continues downwards. Same with Facebook, and a company that's, staying afloat quite nicely, and I just love that I own this as one of my long-term investments in my Roth IRA and in my long-term accounts in the stock market. It's Johnson & Johnson, guys. This thing is a cash flow beast. It's been through recessions. It's a dividend king, been growing the dividend 50 plus years. This is a company that I can sleep well at night holding it, right? There's companies out there like if I had 30% of my portfolio in Uber, for example, not to single out Uber, but I would be very, very nervous. If I had 30% of my portfolio in CCL, I would be sweating bullets at night, right? Let's be honest. But Johnson & Johnson offering about a 3% dividend rate. They're having trials for the vaccine here in a couple of months. Not that I base my investments off of short-term news, but just putting it out there. I just think this company is very, very solid, and it held up today, up almost 1%. Very, very impressive. And another stock here that could be tuning up for another run after a pretty sizable sell-off is Zoom, ticker symbol ZM. At this point, you all should know what Zoom is. It's that platform where you can talk to about 100 people at once. I think 100 people is the limit. And it's like a video chat, right? You can use it with your colleagues for homeschooling and etc., right? People are just doing it simply to hang out with their families, friends. It's a pretty interesting platform. And it's seen a lot of hype, obviously, due to the quarantine and everything going on right now. And it hit that peak at about 175. And from there, we've seen a nice 30% drawdown in the stock. And overall, we're holding the major moving average here, the 180 SMA on this 4-hour chart. And I'm thinking if we break out of 130, this major level of resistance here, I could see a short-term move upwards in Zoom. I could definitely see it. And that's what I'm eyeing up here for this upcoming week. Now, another one, which it's a crazy story, guys, crazy stock, is Luckin Coffee. If you watched my video yesterday, I outlined the crazy trade I made in it, which, again, I don't advise anybody trading a stock like this, which is getting halted left and right. And go check that video out if you do want to see the move I made. But overall, this stock dropped another 16% today. And I have a friend that was asking me, Stas, should I buy call options on this thing in the short term? Should I buy shares? I was like, dude, just in my opinion, again, this is my simple opinion, I would not mess with any stock that is being accused of fraud because, again, their COO allegedly cooked the books here, fabricated a lot of money, on the financial statements, which, again, this move is warranted. This massive move down is warranted, and who knows, this could end up going bankrupt. I'm not too sure, but who knows? It could end up going bankrupt. The stock could end up becoming a penny stock. It could go to 50 cents, $1, or it could end up going back up to 15. Who knows? For me, though, and this is what I told my friend, it's a risky move. I would not put anything in this that I'm not willing to lose, right? And honestly, I'd rather just put a dollar amount, some capital, in a more not convenient stock, but a safer stock, more valuable stock than a stock like this anyway, especially after this alleged fraud. So LK, that's kind of my thoughts there. But either way, I'm still looking to watch it and potentially trade it on this short-term volatility that it's likely to experience and continue to experience. And to talk about that mortgage REIT, guys, it's NRZ. And for some reason, guys, and rightfully so, and many of you guys are the same way, when I see a stock, a REIT, with a dividend of above 10%, red flags start going up in my mind. I start to be a bit, I'm thinking to myself, like, is this safe? That's kind of what I think when I see a high dividend yield. And, NRZ was one of those REITs. This is a mortgage REIT. It's not a stock. It's a mortgage REIT, right? And it had, and typically a lot of these mortgage REITs you see have a pretty high, dividend yield based on the nature of the mortgage REITs. And I'm not an expert by any means, but that's what I've seen from separate, different mortgage REIT REITs. But We saw this one with a 10-12% dividend yield before this debacle, and now that the CV is kicking everybody's butt, this thing has slashed its dividend by 95%, if I'm not mistaken. Let's take a look at this. And it's been halted all day today. Take a look at that. And again, I'm no mortgage REIT expert by any means, but this is this is very, very interesting, right? It's gone from 17 down to about $3. And at the end of the day, they're having difficulties paying those dividends, so they're cutting them. That's the reality of this economic situation that we're in, and we've seen many, not even REITs, but stocks, Boeing, many massive companies, Carnival, right, cut their dividends and likely to continue to cut their dividends here. Other companies are over the next couple of weeks. So another big move today was here in natural gas. If we take a look at these May contracts here, they went up 7% today, guys, up 10 cents. And this is the move that I was trying to hit 2 days ago, or 3 days ago with you guys when I ended up taking that loss. And that's what happens. You sometimes can't time it, obviously, right? That's the nature of the stock market, nature of the business. But it's funny when you take the loss one day and then all of a sudden the next day it makes that move. And it made the move today, guys, but I personally missed it. I'm sure many of you guys hit it, but it went up 18% today, up $3.65. And one thing that I was looking at, but obviously I'm not going to do this because it's against my rules, but I was looking at, hey, maybe an over the weekend DGAS swing, but again, that would be reckless because that's something that I don't do anymore. I used to be more, well, a couple of years ago, I used to, hold these ETNs overnight. I used to hold them and swing trade them, but I learned my lesson, guys. I learned my lesson the hard way when I lost a lot of money on trades doing that, bag holding. So now I just simply day trade them. It's a very easy solution, right? Not holding these overnight. It's tempting to do it, I'll be honest, but you shouldn't. And the prospectus says that these are simply meant for day trading. So for next week, this thing, DGAS, could end up going back up based on the overall trend. And if we go back to NGK20/NGK20, which again, if this goes up, UGAS goes up. If it goes down, DGAS goes up at a 3x rate. So overall, this is getting towards the resistance of this trend, and that's kind of why I was saying, maybe I'll get into DGAS, but again, I don't do that anymore because I've lost my shirt doing it. But if you guys ended up doing it, there could be some potential, especially if this ends up gapping down, but I'm going to wait and see on Monday. If the futures gap down aggressively, there could be an opportunity to get into DGAS. And some other plays, some other things I want to share with you guys. /GC Gold ended up having another pretty solid day, up about 0.7% in terms of these futures, up $11. GLD is holding up pretty solid as well, up 0.5%. And speaking of gold, guys, I dropped the video of my gold unboxing, sharing with you all why I bought physical gold. And if you guys didn't check that video out yet, I'll link it up down below in the description box. Go check it out. It's a pretty short video. And I also go over kind of why I see value longer term in gold. So overall, those are a lot of the stocks and ETFs that I'm watching, what I personally did, and some thoughts here on the market. And another thing, let's go over crude oil before I end off this video. Another monstrous day for crude oil, up to almost $30 a barrel right now, which is insane, up 15% today. And USO, which we talked about in yesterday's video, United States Oil Fund, had a fantastic day as well, up 15%, up 79 cents. So in the short term here, as long as crude oil is continuing this rally, USO, I am very interested in playing this one, and maybe some other oil ETFs as well, maybe like XOP, maybe Gush, and maybe Drip if this if CL ends up coming back down. And Drip, by the way, goes up whenever XOP is going down, so that's kind of a way you can short oil as well. So overall, guys, that is it for today's video. If you enjoyed it, hit that like button for me. Remember, 200 likes, that's a challenge. Let's try to get 200 likes on this video, and consider subscribing to the channel if you haven't done so already. And if you want 2 free stocks from Webull valued up to $1,400, check out my affiliate link down below in the description box. All you have to do is deposit $100 and you'll get those 2 free stocks. So I'll catch you all in the next video. Stay safe, everybody out there. Wash your hands. And yeah, peace out, guys.